Hello everyone. Today I'll be going over my stock portfolio. I started approximately a year ago with 80 shares of Tesla stock, and I sold that stock in September of 2019 to purchase Model 3 Performance. And after that purchase, I didn't really do any trading again until January 1st of this year at 4,741. And at the close of today, I was at $105,035, giving me a 260% gain approximately year to date, with 35,700 being deposited along the way. As of today, I am finally back to that original share count of 80 pre-split shares, or 400 shares of Tesla stock. And you can see that I did yesterday purchase an additional 14 shares to give me an even 400. So my average price was $401.54. But I did turn around and sell a call option on that at 115 right after the purchase. And that call option is now worth $3.50. So I've already made $110 on writing that call option, and it's highly likely it will expire worthless tomorrow. So overall, the market was up slightly today, and the Tesla stock the same, up 2%, after hours another 1.5%. On the account with my main Tesla position, I'm up 905,241 with a today gain of 23.5K. Of the options that I wrote on Monday, only Square is in the money. And it's likely I'll lose this Square stock at the close of Friday if it's above 150. And so going forward for next week, I don't have any plans to sell any more puts of Square to collect premiums. With this latest purchase of Tesla stock, that puts me very high on my margin compared to what I typically am at. I usually try to keep my margin around 20 to 30%, and now it's about at least 80%. So quite a bit higher than I typically have. But with the latest downturn, I did use that opportunity to purchase more shares and go higher on that margin. So going forward after this Square stock moves off, then I have no intention of writing any more sell puts where stock can be assigned to me. If the Ford stock does go back up above 7, then I may start shorting that stock and then writing sell puts on that. Stock goes below 7, I'll write sell puts at 7. Then that stock or that short position would be then closed out if the option's in the money on that Friday. So that would be my only planned purchase going forward for the next week. So looking at Cameco or CCJ, you notice that it did go quite a bit down this week, or actually overall. And so when we have this downturn, I do tend to look at the spot price of the uranium, and the spot price is holding above 30. And whenever it's above 30, I feel comfortable writing options or holding that stock to $12 a share. So my speculation on this drop is that Cameco is likely not participating as heavily in the spot market and purchasing, and that may be very good for their earnings going forward on the third quarter. But this is just speculation. It's not a very liquid market, and there's not that many players when it comes to uranium purchases. So going forward for next week, with the CCJ down low, it's unlikely that I'll get a decent premium writing the call option at 11. So I will hold that CCJ stock until it goes up to about 1050, and then write a call option at that point. And it will either be a call option for that same week, or I'll write it for the next week. And then I'll continue to hold that stock until it is assigned through a call option. And then lastly, how I chose my Tesla option points was based on the historical data and what the maximum amount that Tesla stock had gained in one trading week. And that was around 31%. So because of the battery day that occurred this week, I did set those options originally at 620, 660, and 700, just in case we did make a new record on the largest gain for the trading week. But for the most part, a lot of what was said was going to be some time out, or at least that's what Elon Musk had mentioned. From that, the stock has been relatively flat to down since that battery day occurrence. And so we started the week at 442, or the close on Friday. And so right now we're at 493, roughly 40 points down. And you'll also notice, looking at the probability analysis chart, that the volatility has went down considerably after the battery day. So going into this week, it was almost 160%. And so now it's down to 98% or 99% for the volatility. And so going forward for the next week, based on that implied volatility, we have a 90% chance that it's going to be between 488 and 311 going forward for the end of next week. So that's all I have for today. All right, thank you. Bye.